for goodness sake, pull up a chart, study scientifically or study, logically some of these correlations, because if you don't, you'll be missing the truth. We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers. Welcome everybody to this episode of Talking Trades. And of course, you have Kevin Wadsworth and myself, Patrick Karim. And today we have a good one for you guys. It's all about correlations. What do you do for correlation? How could it help you out? And to demystify all of this, Kevin's going to do a brilliant showcase for you guys.
Correlations, okay. Asset classes. What is correlated to what? Okay, so I suppose I could talk particularly about cryptocurrencies here and what you can glean from the knowledge around correlations. I know there is so much discussion around cryptocurrencies and the fact that they are a special case, that Bitcoin has this halving cycle and it has an S-curve, it has all these different models that apply to the pi cycle and all of these different models that have been applied to Bitcoin. I look at the Bitcoin chart in just the same way as I look at any other chart. And for me, it's behaving no differently to any other chart. So when we do the technical analysis on the Bitcoin chart and observe its cyclical behavior and its 4-year cycle, it reminds me very much of other assets, which also have a 4-year cycle and an 8-year cycle and a 16-year cycle. And of course, gold has an identifiable 4, 8, 16-year cycle. So whatever the cause of Bitcoin having its 4-year cycle, and maybe somebody has very cleverly developed this idea of a halving and this process of halving in the full and certain knowledge that these 4 and 8-year cycles pre-existed. So if you create a story around that, it's going to become very convincing. But when you actually examine the chart for Bitcoin, and I know a lot of people are probably going to be screaming at me for saying this, it doesn't behave really differently to any other chart. Yes, it outperformed everything for a good number of years, and all the way up until 2021, I would say Bitcoin was vastly outperforming pretty much everything. And each cycle, Bitcoin would move up by tens of thousands of percent initially, and then thousands of percent, and then hundreds of percent. And strangely, as time has passed, the gains of Bitcoin have sort of diminished. And if you're looking at your Bitcoin at the moment and wondering why it isn't at 200,000 like we were promised at the start of the year or middle of last year, and we were promised 200,000, 250,000, and you're sort of scratching your head wondering why, well, I can explain that to you. I will explain that to you now. I'm just going to share my chart and start off with not the Bitcoin chart. Actually, this is the chart for the gold-silver ratio, and Pat's discussed this many times. We've both discussed the gold-silver ratio, and it illustrates a type of correlation. And we've got the recessions shown here, the recessions in 2008 and in 2020 there, and you can immediately spot that the gold-silver ratio spikes during into a recession. There's an upward spike. Stock markets do badly, and gold and silver begin to fall, and silver falls more rapidly than gold, and therefore the ratio spikes upwards. So this is a correlation. It's a relationship that takes place between gold, silver, and the economic background, the situation that surrounds recessions and the mechanics of a recession. So you can use this chart to identify when you're likely to see a spike. Now, we've known for a while that the likelihood of a recession is increasing quite quickly. And that comes from not the narratives, not the stories. It comes from the charts. It comes from charts like the yield curve inversion chart, and the fact that when it uninverts, then pretty much inevitably afterwards, you're at a very high risk of a recession, and therefore you're at a high risk of the gold-silver ratio spiking. So you're at a high risk of gold outperforming silver, which suggests that the metals are moving down, because gold tends to, when it spikes upwards, not just when it goes upwards gradually and slowly, but when it spikes upwards rapidly, then that tends to be when gold and silver prices are going down, and gold is just holding its value better than silver. Okay, so that's an example of a correlation. That's just one example, but I'm going to go on and show you another one. I was talking about Bitcoin a moment ago. So this is the Bitcoin monthly chart, and it shows this sort of loss of momentum that I was talking about. The Bitcoin cycles, the 4-year cycles, are clearly shown there with the cycle analysis tool at the bottom. And it just so happens that we've got this very clearly identifiable cycle. And it's not just identifiable by me slapping on those grey arcs on there that show you. And by the way, the cycles are defined by the low to low. Okay, so you identify where the low point is in the Bitcoin bear market, and then the next major low in the next Bitcoin bear market. Those are your low points for your cycle, and that's what defines the cycle length. Not high to high, but low to low. The high points in a cycle can occur early on in the cycle, or they can occur in the middle of the cycle, or they can occur late in the cycle. Okay, so that aspect of cycle analysis is more fluid, and it depends on whether the cycle is left translated or right translated, which comes down to a whole load of other factors, but we won't go into that here. The point that I want to make here is that people will talk to you about Bitcoin and say it's a special case. Okay, and we're talking here about correlations. So what is Bitcoin? What's it behaving like? Is it behaving like gold? Has it been acting? Has it proven to us that it is acting as a safe haven? Okay. Now, bear in mind that from 2012, when Bitcoin was launched, that's when the precious metals bull era ended. The last precious metals bull era ended, and the last stock market bull era started. So Bitcoin has only existed in a stock market bull market. Okay, and that's significant and it's important, and it comes to the heart. It goes back to the heart of the matter that Bitcoin isn't perhaps advancing as rapidly right now as many had expected. Okay, you can see that the cycle's strength is decaying with the TSI, the true strength indicator at the bottom there. The cycle strength is decaying, and it's just turned down again. And it's suggestive. It's not conclusive, but it's suggestive that the cycle is going to turn down and that Bitcoin is going to break down. Now, if it does that, and if it falls below the entire existence support line, then I would put it to you that something very major has happened here, because Bitcoin would have peaked at 109,000, which is nothing compared to previous bull cycles. So if it breaks below 70,000 or roughly 70,000, then something major has gone wrong with everything that everybody's been telling you. And this goes back to having a completely open mind and a blank piece of paper when you're considering these things. Do not listen to the narratives. You could lock yourself in a darkened room, look at the chart, and it tells you everything you need to know. If it breaks out to the upside, we can become bullish. If it breaks down below 70,000, we can become bearish. Simple as that. Ignore the stories, ignore what people are telling you, because they will have all sorts of vested interests. Now, this is the correlation part of it. This is others. The blue chart is others. Others is the crypto market minus the top 10. So it's the altcoin market. Now, if anybody tries to tell you that Bitcoin is going to do something different to the altcoins, then there isn't the evidence for that, because for its entire existence, Bitcoin has done exactly what the altcoins have done, and the altcoins have done exactly what Bitcoin has done. Bitcoin goes up, altcoins go up, Bitcoin goes down, altcoins go down. Tick for tick, up and down, they follow each other. Yes, during certain periods of the bull markets, the altcoins massively outperform Bitcoin, but then there are other periods when the altcoins massively underperform Bitcoin. But you can see on the chart here, the scale for the altcoins is on the left-hand side and the scale for Bitcoin is on the right-hand side. The altcoins have more clearly broken down, and Bitcoin is already moving down, but hasn't made that major breakdown yet. But to suggest that this correlation is irrelevant is at best misleading. At worst, it's intentionally trying to separate you from your money. Okay, and one final chart. This is Bitcoin versus QQQ, triple Q, NASDAQ leveraged chart. So if anybody tries to tell you that Bitcoin is not likely to follow the tech stocks, then look at this chart. They don't follow each other in percentage terms in exactly the same way, but you can see that they peak and trough at the same time. So if tech stocks are going to be in trouble, in fact, the correlation is even closer if you look at NASDAQ 2x or NASDAQ 3x, very close correlation between Bitcoin and the tech stocks. So if someone tries to tell you that tech stocks doing badly and moving into a bear market is not going to have an impact on Bitcoin, there's no evidence for that. Then it might be true 6 months, 12 months from now. And if it is going to be true, then we can spot that on the technical chart analysis. The critical point is that you can do a chart of Bitcoin versus the NASDAQ or Bitcoin versus triple Q, and you can spot Bitcoin starting to strongly outperform tech stocks if that were to be the case. But so far, on the basis of all the evidence from 2012 to 2025, Bitcoin is tracking tech stocks and Bitcoin is tracking the altcoins. And that hasn't changed. It might change. Many of you watching this may be screaming at the screen and telling me I don't know what I'm talking about. Well, fine. But it doesn't matter whether I know what I'm talking about or not, because the technical chart will make my decision for me. Bitcoin will break out again and enter a bull market, and we can respond to that. But these correlations are not to be dismissed. If you're dismissing them because you're just reading on social media that someone says, so-and-so is going to pump my bags. Well, I'm sorry. If you're listening to that kind of terminology, then you're probably being spoken to by a 12-year-old anyway. So all sorts of red flags there. But it's easy to throw around terms and terminology that kind of capture the imagination and fire your emotions. But for goodness sake, pull up a chart, study scientifically, or study logically some of these correlations, because if you don't, you'll be missing the truth of the matter, and you'll be following the fairy stories, which personally I would never recommend, Pat.
Yes, I 100% agreed. Those correlations, and guys, don't forget about causation. The correlation's there, and until they're broken objectively with the price chart action, then you got to respect them. All right, guys, thanks for watching another episode of Talking Trades. Make sure you like, subscribe to get more of this awesome content. And until next time.